Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our euro currency analysis. So recently we talked about the potential possible grabber on the daily chart. This potentially could be formed, but as we said, the chance for that are minimal just because of the overall background that stands on the euro currency. And fundamentally, on the analysis that we have prepared in the weekly report, we have come to the conclusion that euro might show significant upward action, as we expect the new low on the dollar index is around 87.30. And indeed, if you will take a look at the dollar index chart, you will see that it's also showing significant downward action. So actually our destination point, if you remember, stands right here. 87.30 is just because of the large weekly monthly ABCD pattern to the downside. That's the major destination point. So in relation to the euro currency, well, it could be probably somewhere around 25 or around it. And you can see by the timing, it should be somewhere near the April. So that's totally corresponds to our fundamental views. We said that changes are coming in the global economy, but currently they are hidden under the mixed statistics and not everybody see it. But closer to the April, end of March, April, beginning of May, that should become more evident and the overall sentiment could change. And that, as you can see, technically corresponds to the major target on the dollar index, where potentially, again, just supposedly, it could turn up and the new period of the dollar smile could start. Usually it lasts for a few years. So last time it was approximately 4 years, in 2011, 2015. This time we will see what will happen. But that's fundamental view. In the shorter term, you can see dollar index shows also downside action. That's why, in general, currently we do not have any concern about the current upward action. Our nearest targets have been reached. So if you remember, we started the week with this engulfing pattern, which also has this bullish reversal candle, and such should be some ABCD reaching the OP. This OP has been hit on the intraday charts, you will see. And currently we're supposedly watching for 22 area by the few reasons. First is the natural support resistance. Second, this is fib level, 618 resistance, major resistance of this downward action. And third, potentially we could get reverse head and shoulders that agrees with the idea of the longer term action to the upside on the euro currency and action to the downside on the dollar index. So that's why, from the perspective of this pattern, you could see that we probably could recognize here kind of the gutters to buy. So upward action, say ABCD retracement. So on the dollar index, you can see the reflections, mirror of the same type of action. So currently market is not at overbought, and the overbought stands right around 122. So it has the space to continue upward action. On the follow time frame chart, you could see that 21.97 is a fib level. Stands mostly in agreement with the 21.85, 21.87. These levels that we see on the daily chart, on the intraday charts as well. Here is an important moment. I keep on the chart, you can see this previous former confidence, and it's 121, and market has broken through the confidence resistance. This is very important. Means that this really strong action stands, especially if you'll take a look how that has happened. So market actually has broken it without any response to this level. So just minor reaction has happened, but it has happened already after the breakout happened. So now as you can see, it's moving higher. On the hourly chart, you could see that that also was the OP, it's 21.20 area, it's been hit. It's actually the target on the daily chart of the engulfing. It takes the shape of the hand and shoulders that we have traded. Recently, as you can see, we said that retracement probably will be small. reaction on the COP, and indeed has happened just to 2067. This will be approximately 30% support of this upper direction. Then the market jumps further. Currently around the OP, I have put the levels here, guys, on for a case if some retracement will happen. But currently it seems that, well, the market already stands above the OP and above the confluence. No reaction has happened. It's chances that we will get some deep retracement somewhere from this point stands minimal. It's more probable that market will continue gradual and slow action right to the next target. With this overall action, you could see the strength because retracement stands very small. So almost no retracements. Just here is very small retracement. Here again, it's the same. Here's on OP reaction, actually no reaction at all, mostly. From that standpoint, this just shows the strength that market gradually, not too fast, but stubbornly, with the minimal reaction on the target, stands on the way up. This is usually shows that some stable purchasing stands behind of this upper direction. But for some case, I put some levels, so if still retracement will happen, I would consider levels, for example, this confluence, because it will be retesting of the broken confluence on the follow time frame chart, 2097, 2103. Here we have support 2091, 2087. So that will be retesting of the broken confluence. This is first confluence. The stop could be hidden after the second confluence. This is classical approach in trading if you have the two confluence areas and you suggest of upward continuation. But this if downside action still will happen, some pullback. Also, you have taken position after the COP, now could move stops to the break-even or keep it under the second confluence. It's also possible. So tight your stop here. Next target, as you can see, XOP of the same ABCD pattern, and perfectly agrees with the daily resistance, with the fib level on the follow time frame chart. It takes in 2183. So once market will hit this level, we will get agreement resistance right at the potential neckline of the potential head and shoulders. After that, we could get the pullback, so to form the pattern. That's really could happen, and that will be great opportunity to go along with anticipation for the upward action. So that's approximately what we will take a look at on the euro currency.